Okay, to get a global perspective on what things are happening as far as the equity and the global markets are concerned, we are joined by Massimiliano Bondurri. He is the founder and CEO of SGMC Capital. Thank you so much for joining in. What's the sense that you're having as far as the global equities are concerned? Are you all overweight on them? And just give us a distinction of where you believe that the delta will be made. Will it be the developed markets or will it be the emerging markets?
Well, first thing to say is that global equities will remain very dependent on headlines risk. Headlines risk mostly with respect to how the US-China trade war is going to be developing and with respect to potential outcomes in terms of Brexit and especially geopolitical risks. We've seen a lot of volatility over the last few months. We expect that to continue. But overall, the stance that we are taking is that we're being relatively cautious going forward for a number of reasons. First of all, valuations appear already quite rich. Therefore, investors should be a little bit cautious when they're looking to put their money at work in the global equities market. And at the same time, there are a number of uncertainties ahead, and the visibility is very low. Once again, this US-China deal, which we're seeing now, is likely to guide the markets, at least in the short term, especially if there's some kind of truce which is agreed in, and therefore we expect equities to potentially have a little bit of a bump higher over the next few days. But overall, we think that there are a lot of risks out there, a lot of geopolitical risks. Therefore, what we advise investors is to remain invested, but being a little bit underweight in terms of overall equities, and at the same time be relatively protected against that, so potentially even buy longer dated put options on global equities. That being said, there are a number of pockets of value out there. European equities could see a bit of a further move up, especially if at least there's no negative news coming out of the Brexit deal. And a lot of the emerging market equities have been really hit recently because of the fall in global growth overall, but especially in terms of global trade and how the US-China trade war has spilled over, especially in terms of emerging markets valuations. Therefore, we think there are some attractive opportunities out there with respect to that front.
What about crude and commodities? Is that something that you've advised your clients to go in for? What's your view on crude especially?
Well, oil, here we have risk with respect to the supply. So obviously we've seen these geopolitical risks have hit in terms of the supply, so headlines risk. That's likely to continue in the short term, but really the driver in the longer term is with respect to growth and with respect to demand. From that front, we do not expect a huge increase in demand. Therefore, we think oil will likely continue trading around the current levels, and we're not extremely bullish on the asset class. On the other hand, we still see potential in the precious metals, so silver and gold. We think that's an interesting play even at these levels because central banks throughout the world, in the developed and also in the developing world, they will likely continue to ease and will definitely remain accommodative going forward. And even though there's not much inflation out there, obviously, and therefore there will be an environment where gold would outperform, but even though inflation is low, the fact that central banks will continue easing, the fact that we have low visibility and a lot of geopolitical risks will continue driving up the support for these precious metals, and therefore we think there's further room to run with respect to both gold and silver.
Okay, Massimiliano, we leave it at that. Thanks so much for speaking to BloombergQuint.